What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today is Friday. We just closed another week. We're getting ready for the weekend, right? Now, what are you going to be doing this weekend to make sure you are prepared for the upcoming week, right? That's an important question. Please answer that question in the comments. It may help another trader. All right. I appreciate y'all for being here, man. Now let's get straight into this video. I'm just going to go over a couple of the trades that I took this week with you, all in hopes that you will be able to better identify these trades in the future for yourself out there on your own in the wild. You know what I'm saying? But let's get right into it, man. Here's the gold chart. We're looking at the back side of the week: Wednesday, Thursday, Friday. All right. Now you can see Wednesday broke Tuesday's high. Thursday broke Wednesday's low. That confirms Wednesday as our false break at the high of the week. As soon as Thursday breaks Wednesday's low, bam, Wednesday becomes our day one. Thursday becomes our day two, which automatically makes Friday our day three of a potential 3-day setup. And we know that Friday is always day three according to the weekly template day count. All right. Now, if you cannot come up with a daily bias going into Friday, that's really no big deal. All right. Because we're not trying to trade our market predictions. Instead, we're going to be sitting on our hands and we're going to be waiting for our entry criteria to be met in the session on Friday. And we are going to be reacting or responding to what the market does. Nothing about Stacy's program tells us to automatically buy or automatically sell, no matter what. Okay. That's just not what's going on. Every single day, we're going to be following the same process and we're going to be waiting for the market to literally show us what it wants to do before we enter. Okay. Now, here is Friday's chart. You can see that before this 8 o'clock hour hits, we have this very clear high and low range. This is our box, right? Price is always in a box. We're always going to be marking off the same levels every week, every day. All right. We're going to be marking off the previous week's high and low, the previous day's high and low, and then the most recent high and low range before the session opens on the day of the trade. Okay. And that's what you're looking at here. We have marked off the most recent high and low before the market opens. Now, this high and this low would have also been valid. Okay. But that's not what I was doing. I just marked off this low, this high, and then waited to see what was going on. All right. Now you can see we also have the master pattern in full effect here. Peak formation high, peak formation low, higher highs on the inside. Now we're on this potential backside looking for dump and pump scenarios. All right. Just to give you a different way of viewing it, a different way of looking at it. Right. But you can see here, we put in that higher high on the inside. We're up above that EMA. Okay. Then we pull back into that EMA, coil sideways, and then engulf to the upside. All right. Now, this would have been your ideal entry when we get that engulfment. Okay. That market engulfs. As soon as we break that higher high, bam, you're in the market. 1 bar stop or maybe a stop loss at the bottom of that wick right there. All right. Targeting the opposite side of the range, either here or a previous day's high. All right. That's what I did. I closed it early. I don't think we made it all the way up there, but still, my entry was all the way up here. So you can see you don't have to be the first guy in the market. All right. You can wait until you're comfortable. There is a lot of the times there's multiple entries when we have a good trade. Okay. So you can see the same thing happened here. We broke out of those higher highs on the inside, put in the next higher high. The market pulls back, coils sideways into that EMA. We're not all the way back to the EMA, right? But we're still pulling back and coiling sideways and then engulfing to the upside. As soon as that engulfment happens, boom, I'm in the market. Stop loss, 1 bar stop, or at that last downward wick, all right? And I was targeting, like I said, a level from the previous day, but I was up like over 600 pips. Then the market started to pull back and I closed it at around 550 pips with moderate size. Okay. I wanted to make sure I wasn't doing anything too drastic. I didn't want to get overconfident. You know what I'm saying? I already taken a couple good trades this week. So I just wanted to make sure I was playing it safe to close the week. All right. So that was my gold trade. Now here we're looking at the oil trade or the oil market. Okay. I took this short trade on Monday out of the London session. Okay. This was probably the best trade I've ever taken since I opened my live account. All right. Now you can see I have the previous week's highs marked off. We had Thursday's high, Monday's highs in play. You can see that on the new Monday, we pump up, we break those levels, right? And then immediately close back inside the range. We close below that EMA, all right? Now let's zoom in. You can see we have our little M structure. We pump, coil, dump at the high of the day. My entry was that first 5-minute close below the EMA. I've been training myself in a demo account to enter these markets as soon as I possibly can. As soon as my entry criteria is met, I'm trying to get in there. That way I can have this really tight stop loss and the most potential for a profit target. Okay. Now we cannot plan for a move like this. All right. This was due to a presidential tweet, an unscheduled, unplanned presidential tweet that dropped the market over 1,000 pips, probably 1,500 pips or something like that. Okay. In a matter of 5 minutes. You can't plan for that. All right. I got kind of lucky in that regard, but it's my opinion that these news releases, these presidential tweets, they're not going to do anything abnormal. They're just going to speed up what's already in effect. All right. And I literally forgot that I was in this trade, so I didn't close it until around noon, once it was like somewhere around this area, okay? But I still locked in over 1,000 pips, all right? Craziness, bro. I held it for 9 hours, 1,050 pips on this trade. Best trade I've ever taken, bro. Nasty. You know what I'm saying? Nasty. Very simple process, okay? And then I just wanted to show you this Thursday chart from the DJ30 because it's such a nice opportunity. All right. You can see we have a high of the day here in Tokyo. We've started to dump down going into our session timing window. When 9:30 hits, this market pumps all the way back up to the high of the current day. We take out those Tokyo highs, little liquidity sweep or whatever you want to call it, coil sideways for a little bit of time up here, 30 minutes to an hour of sideways movement on this 5-minute chart, and then large engulfments to the downside, all right? And in this case, you can see that red line. As soon as we break that little death line, boom, you can get in that market. Stop at the high of the day, targeting the opposite side of the range or these lows here, and you can see it was a beautiful opportunity. But if you're scared or hesitant to get in here, you can see we broke down, closed below the EMA, pulled back into the EMA, coiled sideways. We're throwing wicks into the EMA, then engulfed to the downside. Bam, you're in there. Stops at the high of that pullback, still targeting the opposite side of the range. Beautiful, beautiful little opportunity on Thursday for this session trade. All right. Now, I hope that this video makes sense for you. I hope it helps you out. If you got any questions, feel free to ask in the comment section or hit me up in the Discord server. All right. I appreciate y'all, man. Until next time, I hope you continue to free your